Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Some people believe football is a matter of life and death. I can assure you it's much more than that. He who lives by the crystal ball will eat shattered glass. Democracy is the worst form of government, except for all the others. Churchill, if you can't convince them, confuse them. I always arrive late at the office, but I make up for it by leaving early.
Like many of us, I had never heard of Cape Verde before this World Cup. Today they made sure millions of us will never forget them. A nation of just around 6 lakh people stood toe to toe with the reigning world champions. On one side, Lionel Messi, a World Cup winning squad, decades of footballing history and one of the deepest talent pools on the planet. On the other, Cape Verde playing with belief, courage and absolutely no fear. Argentina may have progressed, but Cape Verde won something just as valuable today, the respect of football fans everywhere. And a special salute to Wozinha. Every great underdog story needs a hero between the posts, and he was magnificent. Save after save, he kept his team dreaming against one of the greatest players the game has ever seen. Football is at its best when it reminds us that heart cannot be measured by population, budget or reputation. Thank you, Cape Verde. You made the world believe for 120 unforgettable minutes. You made us dream. Global stock markets have just smashed another record, with total market cap hitting $166 trillion. That's a staggering $32 trillion added in just 1 year, a 23.6% surge, far outpacing the long-term 7% annual growth rate. Since the pandemic lows of 2020, global equities have soared 131%, adding $94 trillion in value. Even more remarkable, the world stock market is now worth 134% of global GDP, an all-time high. Investors are clearly pricing in a future where optimism is doing some very heavy lifting. The US just rewrote the energy record books. Total crude oil and petroleum production hit a record 21.84 million barrels per day in April, up 254,000 barrels per day from March and 1.01 million barrels per day, or 4.9% higher than a year ago. Crude oil alone climbed to a record 13.93 million barrels per day. Since the 2008 financial crisis, total petroleum output has quadrupled, while crude production has surged 250%. That's a reminder that America's shale engine is still running at full throttle, and that's a powerful force keeping a lid on global oil prices. As Mark Twain said, the secret of getting ahead is getting started. US shale clearly got that memo years ago. The headline says 57,000 new jobs. The fine print tells a different story. The household survey showed employment falling by 5,07,000, while the labor force shrank by 7,20,000. Yes, the unemployment rate dipped to 4.2%, but largely because fewer Americans were counted as looking for work. Meanwhile, the labor force participation rate slipped to 61.5% from 61.8%. Sometimes the headline is a trailer. The real movie is buried in the footnotes. Markets may need to rethink just how healthy the US labor market really is. As Benjamin Disraeli said, there are 3 kinds of lies, damn lies, and statistics. Everyone talks about electric vehicles. Fewer talk about mines needed to build them. By 2030, the energy transition will require 293 new mines, including 61 copper mines, 52 lithium mines, and 28 nickel mines. Copper alone faces a 3.7 million ton supply gap on top of today's 22.9 million tons. The catch? New mines typically take 10 to 15 years to permit and develop, while ore grades are falling and costs are rising. The biggest challenge to green transition may not be demand, it could be digging fast enough. Here's a statistic that raises more than a few eyebrows. President Trump's investment accounts reported 3,642 securities transactions in the quarter ended June 2026. That's roughly 58 trades every trading day, or 1 trade every 7 minutes, while markets are open. According to reports, the trades were executed by independent portfolio managers, not by Trump himself. Still, the sheer volume is extraordinary. The real question isn't whether the trades were legal, it's whether a sitting president should have investment accounts trading this actively while shaping policies that can move markets in real time. India's retail investors are back, and they're making up for lost time. After staying cautious for nearly a year, They poured 35,328 crores into equities during the June quarter, the strongest quarterly buying since December 2024. That's a dramatic turnaround from the 33,021 crores they pulled out just 2 quarters earlier. It suggests confidence is slowly returning as markets stabilize and earnings expectations improve. Of course, retail investors do have a habit of showing up once a party gets interesting. The key question now is whether this is the start of a sustained trend or just a confident first step back into the market.